Welcome back to Build Wealth Now News, or BWNN. I'm your host, Billy Bob, and welcome to our viewers joining this channel. And with me today is our star market analyst, Sarah. Sarah, what do you have for us today?
Thanks, Billy Bob. Always a thrill to be live where the action happens, especially with markets buzzing like they are today.
Buzzing is right. And not just about earnings or rate cuts, but about some big geopolitical moves shaking up investor sentiment. I'm talking, of course, about what's going on with Greenland and Venezuela. Sarah, break it down for our BWNN viewers. Why should stock investors care about Trump wanting to buy Greenland again?
Absolutely, Billy Bob. At first glance, it sounds almost like a headline from satire. But this is 2026, and markets are taking it seriously. The reason? Critical minerals and strategic positioning. Greenland holds one of the largest untapped deposits of rare earth elements, materials essential for everything from defense electronics to electric vehicles and wind turbines. Right now, China processes over 80% of the world's rare earths. If the U.S. gains influence or even partial control over Greenland's resources, it could reshape supply chains overnight.
Whoa. So you're saying this isn't just about real estate, it's about securing the future of American tech and defense manufacturing?
Exactly. In fact, defense stocks are already reacting. Earlier today, shares in companies like RTX, Lockheed Martin, and even Freeport-McMoRan saw upticks, not because of new contracts, but because investors are pricing in a more aggressive U.S. stance on resource independence. And remember, Trump's also pushing this Golden Dome missile defense shield concept. Where's the best place to put early warning radar for that? Greenland.
Makes sense. Now, what about Venezuela? There's talk of a U.S.-led operation there, too. How does that tie in?
It's part of the same playbook, energy and resource security. With Venezuela still sitting on the world's largest proven oil reserves, any move to stabilize or influence its oil output directly affects global energy markets. If U.S. energy firms gain concessions, that could pressure crude prices and benefit domestic integrated oil majors like Exxon or Chevron. But, and this is key, it also introduces execution risk, political instability, international backlash, sanctions fallout, all that can create short-term volatility.
So for our BWNN viewers watching their portfolios, what sectors should they be watching this week?
Three key areas: defense and aerospace. Geopolitical tension is their tailwind. Critical minerals and mining. Look beyond the majors. Junior miners with Arctic or rare earth exposure could see speculative interest. Energy, especially if Venezuela-related supply starts moving. But caution is warranted. These are macro-driven trades, not long-term fundamentals. The Greenland situation, in particular, is more about rhetoric right now. Denmark and Greenland aren't handing over sovereignty. Still, the narrative is powerful enough to move markets.
Outstanding insight, Sarah. So, final thought. Should investors be buying the hype or waiting for concrete action?
Wait for confirmation. Trump's team has signaled bold intentions, but unless we see actual resource deals, military agreements, or policy shifts like executive orders fast-tracking Arctic mining, this remains a sentiment-driven rally. Smart money is watching, not chasing.
There you have it, viewers. Don't gamble. Build wealth strategically. Sarah, we should move on to the Relative Strength Matrix, or RSM. Let's analyze the S&P 500 exchange-traded funds, ETFs.
Sure, Billy Bob. From the Relative Strength Matrix, XLV is the undisputed leader in both long-term and recent momentum. It has consistently outperformed across all time frames, a sign of institutional accumulation and defensive quality bias in the market. This followed by the XLF, which is the financial ETF. The financial sector is in a sustained uptrend, possibly benefiting from rate stability or economic resilience.
So healthcare is the undisputed leader, and 45 is crushing it across all time frames. Let's zoom in on the individual stocks inside that sector. And the image you have on screen with Relative Strength Matrix and the key financial metrics, it's a gold mine. We've got a filtered view of the healthcare sector today. Not just technical strength, but financial health too. This isn't just about momentum. It's about quality plus strength. Sarah, walk us through what we're seeing here.
Thanks, Billy Bob. What you're looking at is the relative strength matrix, RSM, for healthcare stocks, but with a twist. We've applied 5 key financial filters with 2 relative strength conditions to separate the strong performers from the flashy but fragile. Only stocks that passed all 7 made the cut. Let me break down the filters quickly. EPS greater than 0, current and LTM, profitability check, operating margin greater than 5%, operational efficiency, net margin greater than 0%, real profitability. Quick ratio greater than 1.5, short-term liquidity strength, current ratio 1 year ago greater than 1.5, historical liquidity, RS63 greater than 50%, short-term momentum, RS126 greater than 50%, medium-term trend. If a stock failed even one, it's out. No exceptions.
So who made the cut and who got the boot?
Let's start with the top performers, the ones that are both technically strong and financially sound. 1. Regeneron Pharmaceuticals, REGN. RS63, 98.1. RS126, 98.4. Still elite momentum. EPS, $41.59. Net margin, 32.1%. Quick ratio, 3.2. Extremely healthy. ROE, 15.2%. Solid return on equity. Analysis. REGN is the poster child for this filtered list. Strong growth, high margins, tons of cash. Their obesity and immunology pipelines are firing on all cylinders. This is a core holding. Other standouts that made the cut: Intuitive Surgical, ISRG, RS63, 94.1, RS126, 93.4, strong, consistent, EPS, $7.56, net margin, 24.7%, quick ratio, 3.5, excellent liquidity. Analysis, robotics leader, high margins, strong cash flow. One of the few pure-play growth names that passed all filters. Merck & Company, MRK, RS63, 90.2, RS126, 91.7, solid momentum. EPS, $7.56, net margin 29.6%, quick ratio 1.5, barely makes the cut. Analysis, key player in cancer drugs, Keytruda. Margins are stellar, liquidity is tight but acceptable. Good defensive pick. A few stocks that are strong technically but were filtered out as they did not meet our key financial metrics. Those stocks were BMY, LLY, CAH, and ABT.
So if I'm building a portfolio right now, which stocks should I be focusing on?
Here's your top 3 buy list based on this filtered RSM. Regeneron, REGN. Strongest combo of momentum, profitability, and liquidity. Intuitive Surgical, ISRG. High margin growth with bulletproof balance sheet. Merck, MRK. Defensive giant with near perfect margins and just enough liquidity. And here's your watch list. Stocks that are close to qualifying: Eli Lilly, LLY. Fix the liquidity and it's back in. Bristol Myers, BMY. If they reduce debt or improve cash flow, it could be a value play.
What about the defense sector? We saw Trump's comments earlier. No dividends, no buybacks. How does that affect healthcare?
Great question. While Trump's threat is aimed at defense contractors, it sends a broader signal to corporate America. Prioritize production over shareholder returns. For healthcare, that means companies like BMY and LLY, which have been returning capital via buybacks, may face pressure to reinvest in R&D or manufacturing. That could hurt short-term EPS, but help long-term innovation. So if you're buying REGN or ISRG, they're already investing heavily. You're ahead of the curve.
Final thought, what's the big takeaway for BWNN viewers?
Don't chase momentum alone. The RSM tells you who's winning, but the financial metrics tell you who can sustain it. In this filtered view, Regeneron is the clear winner. Strong technically, rock solid financially. That's where smart money should be.
Thanks, Sarah. You have made it simpler for our viewers to value a business. To our viewers, if you found this deep dive helpful, smash that like button, subscribe, and hit the bell so you never miss a stock breakdown. Please leave your comments below. Sarah and I will see you in our next episode as we build up a portfolio for 2026. Also, please leave your comments below. Once again, Sarah and I wish you a happy new year 2026, and we are looking forward to a great year. BWNN is dedicated to research the businesses behind the stock names. Our research are done with artificial intelligence assistance using the best practices in the industry. Please note that investing carries its own risk, and you should do your own research before committing any stock to your own portfolio. This video is done for educational purpose only.